A garbage company earns a 33% operating cash margin. Higher than most software companies you can name. Not from the trucks. From the hole in the ground. America had roughly 8,000 active landfills in 1988. Today it has about 1,200, and almost no one can build a new one. So when Waste Management, ticker WM, paid $7.2 billion to acquire Stericycle in late 2024, it wasn't paying for trucks either. It was paying for the right to be the only company that can legally make medical waste disappear. This is the toll booth nobody talks about. Let's open it up. Here's the part Wall Street underrates: trash is non-discretionary, recurring, and contractually locked. You don't cancel your garbage pickup in a recession. Municipalities sign 5 to 10-year exclusive contracts. And the bill is so small, $40 a month, that customers barely notice when it climbs. That last point is the whole game. Pricing power that hides in plain sight. The three companies that dominate North American solid waste, Waste Management, ticker WM, Republic Services, ticker RSG, and Waste Connections, ticker WCN, together control well over half the market. They don't compete on price. They compete on routes. And routes, once you own them, are almost impossible to take. The real asset isn't the truck. It's the landfill at the end of the route. In 1988 the U.S. operated about 8,000 active landfills. By 2024, roughly 1,200 remain. New ones take 5 to 10 years to permit, environmental review, water table studies, and a community that will fight any landfill within 50 miles of their backyard. So the supply of places you are legally allowed to put garbage is fixed and shrinking. WM alone owns 257 landfills. You cannot replicate that with capital. You'd need a decade and political permission that mostly doesn't exist anymore. That's the moat. A scarce, unbuildable, government-gated asset, sitting under the most ignored stock sector on the market. Now watch the pricing. Trash collection inflation runs roughly double the headline number. In March 2026, the Consumer Price Index for garbage collection rose 4.7% year over year. General CPI? Around 2.7%. The big three each pushed through 6 to 7% core price increases in early 2026, and landfill tipping fees jumped about 10% in a single year, to $62 a ton. Think about what that means. A business with fixed routes, raising prices faster than inflation, every single year, on a service you can't refuse, and a small enough bill that nobody complains. That is the closest thing to a private tax that exists on a public exchange. Let's put the field on the board. Waste Management, about $22 billion in revenue, the largest fleet and the most landfills. Republic Services, around $16 billion, the cleanest operator, margins north of 32%. Waste Connections, the rural specialist, and the margin king at 33%, because it deliberately serves markets where it's the only hauler in town. Then the next tier, GFL Environmental, the Canadian roll-up, Clean Harbors, ticker CLH, the hazardous and industrial waste play, and Casella, ticker CWST, the Northeast Consolidator. If you're tracking the boring oligopoly playbook, toll booths, scarce assets, pricing power, subscribe. Next in this series is North American railroads. Same depth. Start with the giant. Waste Management's classic engine is internalization, sending its own trucks to its own landfills, so the profit never leaves the building. That's why its margins keep grinding higher. WM crossed 30% operating cash margin for the first time in fiscal 2025. Then came the $7.2 billion Stericycle acquisition, closed in November 2024. Overnight, the trash company became the largest medical waste company in North America, sharps, chemo waste, surgical waste, a regulated business with its own permitting moat and even stickier customers. The market still files WM under garbage. It's quietly become a regulated waste conglomerate. Republic Services is the operator's operator. Less empire building, more relentless efficiency. Its environmental solutions arm, the part that handles industrial and event-driven waste, has become a margin engine, pushing company margins above 32%. Republic has raised its dividend for over 20 consecutive years and buys back stock steadily. That environmental solutions segment, hazardous waste, PFAS remediation, industrial cleanup, now represents roughly 11% of revenue and is expanding margins faster than the core hauling business, turning what used to be a commodity truck company into a specialty environmental platform. It's the name you'd point to if you wanted to see the boring compounding thesis in its purest form: low drama, high return on invested capital, year after year. Waste Connections runs the smartest niche strategy of the three. It deliberately avoids big competitive cities and instead dominates secondary and rural markets, places where being the only hauler means no price war ever starts. The result is the highest margin in the group, around 33%, and a long record of double-digit returns. In its most recent quarter, WCN posted 6% core pricing growth in markets where competitors simply don't exist, and its free cash flow guidance for 2026 sits at $1.4 to $1.45 billion, a number that reflects what monopoly-like route density actually looks like on a balance sheet. The lesson hidden here: in waste, the best economics aren't in the biggest cities. They're in the towns where you're the only truck that shows up. Here's the upside almost nobody is pricing. The gas that landfills used to flare off as a nuisance is becoming a profit center. Landfills emit methane. Capture it, clean it, and you get renewable natural gas, and under the Inflation Reduction Act Section 45Z credits, extended through 2029, that fuel is now among the most profitable clean energy in the country. Waste Management's renewable energy EBITDA more than doubled in the first quarter of 2026 alone, on a path toward a roughly $1 billion annual engine. WM owns 257 methane-producing assets. The same scarcity that makes landfills a moat is now making them power plants. There's one more compounding lever: acquisitions. North American waste is still fragmented at the edges, thousands of small municipal and family haulers. Every year the big three roll up dozens of them, plug the routes into existing landfills, and instantly lift the margin of what they acquired. In 2025 alone the industry logged roughly 202 disclosed deals worth $5.7 billion, and the runway is long, because thousands of independent family operators still haven't been absorbed. It's a self-funding flywheel: pricing above inflation generates cash, cash funds routes, routes feed landfills, landfills raise margins. This is why the sector grows earnings in good years and bad. The merger and acquisition engine never depends on the economy. Now the honest part. What could break the thesis? First, recycling. When commodity prices for recycled cardboard and plastic fall, that revenue line swings, though it's a small slice. Second, labor and fuel costs. These are truck and driver businesses. Third, and most cited, do electric vehicles or zero-waste policies shrink the pile? Not meaningfully this decade. Household and construction waste tracks population and GDP, not powertrains. The bigger real risk is valuation. Because the quality is now well understood, these stocks rarely look cheap. So this isn't a hidden gem anymore. It's a known compounder, and the debate is price, not quality. Where does this go over the next 1 to 2 years? Base case: mid-single-digit revenue growth, high single-digit earnings growth, margins grinding higher as internalization and renewable natural gas scale. Probable, not guaranteed. 3 things to track. 1. Core price increases. Watch whether the big three hold 6% plus pricing as headline inflation cools. The spread is the thesis. 2. WM's renewable energy EBITDA run rate. Is it converging on that $1 billion target by 2027? 3. Merger and acquisition pace and landfill volumes. Acquisition spend and internalization rate are the flywheel's fuel gauge. Catalysts up: data center construction waste, renewable natural gas credit monetization, more medical waste integration. Catalysts down: a recycling price slump or a regulatory push on landfill methane that raises compliance cost. Upstream sits the truck and equipment makers, downstream sit the utilities buying that renewable gas. The toll booth in the middle keeps collecting. The most boring business in America, hauling what you throw away, turns out to own scarce assets, raise prices above inflation every year, and now sells clean energy on the side. Wall Street still calls it garbage. The margins call it something else. I'm Big Z, follow me, see you in the next deep dive.